What's going on, everybody? JT here. We've got C. Will over at the Passive Income Network. This is the next block. Unfortunately, David might not be able to join us today. He's escaping that hurricane down in Florida, but we've got with us Aaron Martinez over at Headline. Excited to have this conversation. Welcome everybody to the show. Hit the like button, subscribe to the channel if you haven't done so already, and let's hop to it. How you doing, Aaron?
Doing great. How are you doing?
Doing absolutely fantastic. I appreciate you taking the time out of your day to come on our show.
Definitely. Yeah, I'm happy to be here.
Yes. Yes, excited to have you. See, y'all have been busy, so it's gonna be a lot to talk about here.
Awesome. Looks like David's tuning in and watching the show, so I hope you're staying safe out there and appreciate you joining.
Yeah, what's good, David?
Fantastic, though. So let's get right into it, honestly, because Headline is been doing a lot of things. It's really actually hard to keep up. I can't even keep up with all of the different announcements that you guys make. So if we could just start off with maybe a brief introduction on who you are and what Headline does as more of a broad overview, and then we'll jump into more interesting things from there.
Definitely. So Headline is a Texas-based blockchain development company. We build exclusively on Algorand. We started building specifically for dev tooling. So because our background's in dev tooling on Algorand, it essentially allowed us to create the entire production stack. So now when we build decentralized applications, we can basically iterate and build on top of a full development stack that we've already put together, specifically for us in the community. So it allows us to build a lot of applications really quickly, and we build a lot of different stuff. It's pretty exciting.
So y'all kind of like a software as a service company or a part of it?
I'm sorry, can you repeat that?
Is y'all kind of like a software as a service company, a SaaS?
Not necessarily. So we do custom work as well. Like we can do smart contracts for projects and stuff. But right now we don't have SaaS products necessarily. There's a few SaaS products that we're developing, but we don't have anything in production SaaS related right now. So we're specifically building Web3 applications.
Nice.
Beautiful. I want to talk about Silo because Silo is a derivatives application that Headline is working on. I believe you guys acquired the app from, I forget who was actually on my show that created the app originally, but you guys acquired it from him and, then built it out into what it is going to be, hopefully in the next couple of weeks, maybe a couple of months. If you could speak a little bit more on Silo derivatives in general and maybe give it a little timeline for its release.
Gotcha. Yeah, absolutely. So we acquired it from Phil, who created it originally as ALGO Options. He's also building Alamex right now. It's a really, it's a really,
name.
it's a great name. But so Silo is going to be the first decentralized derivatives protocol in Algorand, specifically for options. It's pretty interesting because there's a really high bar in terms of decentralization that we need to be able to reach in order to make sure that a product releases something that can be released globally without having to basically restrict different jurisdictions or anything like that. And there's general consensus within the regulatory regime that things that are fully decentralized, for the most part, are usually pretty clear to operate globally. So there's a few examples of derivatives protocols and other chains that are able to do this because of the level of decentralization. A good example is Lyra Finance. They're one that we like to use as an example for how to build a really robust decentralized protocol. They're based on Ethereum, and that's kind of where we see the roadmap for Silo headed as well. So basically what we're doing right now is we're basically building the production model and something that can create as seamless of an experience as possible for users, because Silo is a little bit different than derivatives protocols you might have seen. So other examples you see use something called automated option vaults, or basically automated strategies, which means that you put your assets into the vault, and then the vault protocol or the team running it essentially sell those as a bundle to whitelisted investors. So those protocols are kind of more like yield farming in a sense, whereas Silo allows for any DeFi user to become the market maker. And that basically giving you that level of freedom is something super important to us because it really stays in the spirit of decentralization, right? So basically, with automated option strategies, when you agree to a strategy, you're basically stuck with that strategy until expiration. So it's called a European style strategy. With ours, it's American style options, which means that you can basically withdraw your assets at any point instead of having to wait till expiration. And that actually gives you a whole lot more flexibility with whatever it is you're trying to hedge within your portfolio. Because let's say, for example, Algorand's having a really like banner week, right? And they're up 35%. With Silo, you could basically, take that 35%, depending on if you have, calls or puts or anything like that, and you could take the profit on it. Whereas an automated option strategy, Paul, you basically have to wait until expiration to see if it's still that 35% up. And because of the volatility within crypto, that actually kind of limits the amount of upside to any kind of strategy you're doing. So there's a whole bunch of different things like that work really, really well with the way that Silo is built. So it allows you to take that profit, allows you to adjust your hedging and your risk portfolio at any point within the period, as long as your assets are still available to you and everything.
So is there a rough timeline on the release of Silo?
Yeah, definitely. So the audit started a little over a month ago. I don't know how long it's going to take. I thought it would take about 4 weeks, but it might take 6 weeks or so. So our timeline is to be able to hit mainnet approximately 2 weeks after the audit is complete, which will give us time to make any tweaks that need to be made, and to make sure that those also get a look over as far as whether it be like the fees or the names for the assets, like super minor things like that. It also gives us a chance to get whatever feedback as far as UI and everything, because they're doing everything. They're not just doing the smart contracts. They're also going to be reviewing the front end, how everything integrates, and looking for any kind of attack vectors. Basically, not just exclusively on the smart contract. Some audits exclusively look at the smart contract, and they don't actually take into account the whole picture of the application and how users could interact with it in ways that might be detrimental to them. So our goal is to hit mainnet 2 weeks after the audit is complete. So anytime within the next 3 to 5 weeks, probably.
Oh, that's awesome.
So I see a lot of questions in the comments. JT,
Same.
I see you got them starred. Want to start answering some of these questions for Aaron?
Absolutely. Do you want to read this one out?
Silo, what is the max X we can trade? Like FXDS has 30X. What will the max for Silo? So options and doing like leverage, it's a little different from my understanding, but I'll pass this to you, Aaron.
Yeah, absolutely. So you have unlimited ability to hedge with Silo, basically. So it doesn't work like a lending protocol at all. So with a lending protocol, basically you can leverage your position up to a certain amount by providing collateral, and then you get liquidated if your strategy gets blown. You cannot get liquidated with Silo. So basically, no matter how much you want to leverage, you can potentially, as long as there is enough liquidity for it. So part of what makes Silo different than something like FXDX, which is a full market for that lending protocol, is Silo is a platform for the market makers, right? So you as an Algorand investor could be like, all right, I have 50,000 Algo. I want to generate yield on this Algo. Okay, so basically you go to Silo, you pick a strategy you like, depending on whether or not you want calls or puts, depending on, whether you think the price is going to be going up or down, and then you pick your expiration date and your strike price. And that strike price is basically the difference between a current price and the price at which the option can execute in the money for the end user. So part of what our job is going to be is to educate people on how DeFi options work, because some of the terminology is stuff that people might not be familiar with unless you come from a background in finance that deals with derivatives and stuff like that. But you basically have unlimited hedging ability. As long as, like I said, there is enough liquidity for it. So let's say, for example, you are a user that has minimum Algorand exposure. You think Algorand's about to do a huge, hit a big run to the upside. You could basically go to a market where Silo options are going to be available, like whether that be Pact or Tinyman or some of the other dexes that we're talking to right now. And then you could basically go and acquire as many of those Silo tokens that you would want for that position. And one Silo token is 100% collateralized as one algo in the vault. That's a really simple way of thinking about it.
Yeah, and I'll say to the audience, like if you want to go study options, definitely download the Robinhood app. It's really good for some quick learning on there, because options is definitely gets a little confusing, and I can only imagine how confusing it is now that we're using the blockchain.
Absolutely. And
Yeah.
David's got a good question tuning in as well. So what makes derivative products so hard to build on blockchains in general?
So one of the biggest problems with Algorand right now is the lack of oracles. So for certain types of really advanced derivatives protocols, you really want an oracle or some kind of on-chain VIX, which is a volatility index. We don't have anything like that in Algorand. So the solution on Silo is actually really innovative. And the way it works without an oracle, because basically you want to be able to make sure that the price that something is being the option strategy is being created at is what it also gets executed at, right? So you really need really precise measurements for pricing. The way it works on Silo is it's all 100% USDC backed, right? So basically any kind of strategy on Silo at the time of contract creation is created with a fixed USDC value. And because it's fixed, it's stable backed strategies, there's no need for a third-party oracle. And that's one of the things that makes it a really unique protocol. And one thing that makes it work really well in a fully decentralized way, right? So every single basically thing you add to this stack can reduce the amount of decentralization. So as much as you can put into smart contracts, the more potentially decentralized it can be. So basically having a on-chain in-contract solution for the strategy pricing is really, really innovative. And that's one of the things that we're going to have at launch.
That's awesome. Now, that's a really interesting way to go around the lack of oracles. Now, I'm curious though, because oracles are probably right around the corner for Algorand. I know we've got Goracle coming. We've just had the recent upgrade that I believe should help with that as well. Could you envision eventually maybe a redesign for Silo that does incorporate oracles and maybe gives it a little bit more flexibility?
Yeah, we actually already have a few things that we're building specifically for oracles. So one of them is almost done. We're testing it right now. It's a really small experiment we started where basically 2 DeFi users can agree to make a wager on the movement of an underlying ASA. And this is something that could get added to an analytics platform. And basically let's say somebody says, I think Akita is going to do a 12% pop in the next 48 hours. They can basically create what's kind of like a limit order wager on it, right? You need an oracle for this though to really work well. And so we're using the testnet oracle that Oracle has specifically for the USDC algo pair. And then basically let's say somebody else is viewing that that token pair, they could get a pop-up on their screen that says, oh, so-and-so has just placed a limit order for this strategy, for this ASA. Would you like to take the other side of this? Or do you want to get in on that essentially? So this is an experimental application that exclusively uses oracles. For Silo specifically though, our V2 will absolutely need an on-chain VIX. We want to build a Black-Scholes AMM specifically for Silo that would need a VIX to work really well. So
what was that last part? You said an AMM?
Black-Scholes AMM. So Black-Scholes is like the holy grail of what you want to do with DeFi options, and it's basically being able to calculate the Greeks directly into the pricing of the option strategy, and that works really well with AMMs. So Lyra Finance, again, as an example, is one that we're looking at as a model for how we can build it on Algorand. But in order to do that, we need an on-chain oracle that we can use to build essentially a volatility index with.
Wow, sounds like some complicated stuff there. Before we go on to some more of these questions, can we just talk about the team and developers who are actually building out all of these products and platforms?
Definitely. Do you have specific questions?
Yeah, like how many people are on your team? Is it, just kind of break down. I know you would need at least a few people to build this platform that you're talking about, but is it like you guys got a rotating team working on all these, or is it like just to get an understanding of so many projects and like how you guys' workflow is going?
Definitely. So about 2 months ago, we had like 18 that were on the team. Of those,
Wow.
12 were devs and 6 were community managers or something like that. But during the bear market, we've definitely downsized to be as capitally efficient as possible.
Yep.
So right now we have, let's see, we have six devs that are working on our stuff, basically full time, and then we have some people that operate in advisory capacity as well. Of those 6, 2 are specifically for smart contracts, and 4 for, or no, 2 smart contracts, 1 back end, 3 front end is a good way of breaking it down. Because not only do we build, like I said, not only do we build our own applications, but we also do contract work for other projects and stuff too.
Excellent. Thank you for that breakdown. Let's get back to these questions. You got a whole bunch. JT,
Yeah.
you want to grab the next one?
Yeah, sure. There's a couple more questions rolling in. We've got Oyster Pack tuning in. How you doing, Oyster Pack? He's asking, will jurisdiction restrictions apply to Silo? Effectively, will it be available to U.S. investors?
Right. So that's, like I said, about why it being a fully decentralized protocol is really valuable. Because it's fully decentralized, we don't have to place any kind of jurisdiction restrictions on it. So it'll be available to all U.S. users, all global users, essentially. And there's a couple of good examples of protocols that are able to operate this way. Lyra Finance is a good example of one. Friction on Solana is another. They're actually based in Austin. And I think they have a lot of investors from the Algorand ecosystem. I think Pillar is one of their main investors too. But so they're a good example of right up the road, another protocol or another builder that does these DeFi protocols that can work with DeFi options. And because it's fully decentralized, that means that there's no exchanging of custody over the assets. We don't have any sort of interaction with the contracts once they're created. Users can mint or unmint at will. If we took over any kind of custody, like you see with automated option strategies, then we would probably have to restrict jurisdictions. So a good example of this might be Algorand, the automated option strategy vault that just launched. They're coming out of the Algo Forge. I think I'm getting this name right. The Algo Forge incubator in Singapore. So they have restricted access to Algorand from US, and I'm not sure what other jurisdictions. And I believe, I haven't spoken with the team, but I believe it's primarily because of the method of which the protocol essentially uses a wireless group of investors to essentially buy the option strategies instead of it being a fully decentralized protocol. So having that, basically being able to have that full decentralization allows it to operate globally without jurisdiction restrictions.
That's what we like to hear. How will Silo be attracting like liquidity and users and whatnot?
Definitely. So one of the interesting things about it is that there is intrinsic value to Silo tokens. So if you are on TinyMan, for example, or if you're on Pact or something, and you see a Silo token, because it's 100% backed by Algo, there is intrinsic value there. Now, depending on how much in the money or out of the money it is, depends on the demand for it at that time. But because it's basically 100% backed by Algo up until the point of expiration, there is going to be intrinsic value. How much there's going to be with that is definitely going to depend on the strategy that's being implemented. But we expect there to be a significant amount of interest in the protocol, especially because, to my understanding, it's one of the only major DeFi protocols launching on Algorand Q3. Another big one I know we have around the corner is XPact. We're pretty excited about that one. But as far as something that's going to be, fully audited, has, a full production build, fully decentralized, all of those things built out, we should be getting a fair amount of interest as far as like providing liquidity, because that's where it gets interesting too. So because of the nature of the platform, there isn't a explicit need for liquidity providers like there might be for other sorts of assets, but it's definitely needed, especially for anything that's not limit order. So it'll also be available on Algo Dex and other limit order dexes, but we expect the majority of the activity to happen on AMM still. So it'll be interesting to see what that liquidity ends up shaking out to, because there's three primary ways that end users can generate yield with Silo. One is by doing any kind of limit order over-the-counter selling of the tokens that you're minting. The second is by providing liquidity on a DEX and collecting the premium that's coming from that. And the third is by collecting the fee if the option is executed. So let's say, for example, you're a big liquidity provider on TinyMan for one of the Silo strategies. And people end up buying, let's say, like 50,000 algos worth of Silo tokens from your position. And when they decide to execute it, it's in the money, then you still get a collective fee from that. So even though they are executing it and you basically have to rebuy back your algo because they executed the option, you got to collect the fee from them executing that option as well.
Fantastic. I definitely agree to your prior point, maybe about 10 minutes ago, that I think education is going to be the next big step in.
Huge.
Hey, my same thoughts.
Absolutely. So,
terminology is different than what a lot of people are familiar with. The way that people are going to interact with it's even different because, like you said, using Robinhood, for example. Well, in Robinhood, you're the end buyer of the strategy. You're not the market maker. Nope. So even just like going to the front page for the application for Silo has caused some confusion because of the way you pick whether you're minting a call or put strategy is actually inverse than if you were an end user buying a call or put strategy. So even things like that, we want to get some educational videos created as well that can kind of walk people through the process. We're trying to make it as seamless as possible. That's why we're talking to different DEXs about integrating it or functionality for it specifically into the way these DEXs are operating, so that people can basically mint the Silo tokens, go directly from that to their DEX of choice, which will directly take them to the specific pool for that strategy, and then they'll be able to choose whether or not they want to sell or provide liquidity directly from that. If you go on Silo right now, we have a couple of integrations already that you can check out. So like if you were to go mint Silo tokens, you can click the button for the DEXs, and then you can click on TinyMan, and it'll directly take you to that specific pool on TinyMan. And if it hasn't been created, it'll tell you that you can create the pool, at which point you can choose essentially the pricing for that strategy. And obviously the closer the price of USDC is to the Silo token, the more valuable that option strategy becomes. All of our pools are recommended to be made with USDC, because really weird things are going to happen if people make algo pools with Silo tokens. Because you talk about adding layers of complexity to your strategy, a algo and Silo token pool, things could get crazy.
Because you got Silo backed by basically a stable and algo. Yeah, so that can get crazy.
Oh, absolutely. You're going to need a whiteboard to try to make sense of your position, your hedge after a day or two of that.
absolutely. We have maybe one more question here that actually provides a great segue into NFTs. So let's bring up this question right here from Samantha. Will Platinum Astro holders have a discount on fees on the application? And after you answer that question, I'll give you an opportunity to just talk about Platinum Astro, the Platinum Astros in general, and all the NFTs that Headlines are working on.
Sure, definitely. So Platinum Astro was specifically created for the DEX that we built, and it'll essentially allow the holders of it to never have to pay any kind of fees to use the DEX. So it's basically the ASA for the Platinum Astro is hard-coded into the DEX, so that when you're essentially doing a swap on HDX, it'll check to see if you're a Platinum Astro holder. And if you are, it won't make you pay any fees. We don't have any integration for any of our NFTs into Silo yet. Silo is very much it doesn't have those layers of complexity added to it yet. There's been some conversation within the community about adding features like that, but we're really looking to see how the production rollout of this is going to work before we start looking at ways to integrate additional layers on top of it. And to that end, we do have, of course, HDL utility built directly into the platform because we're planning to launch our first governance period for it 4 weeks after mainnet launch. That's one of the advantages of having a live token, especially one that has, I guess, a year and a half of maturity on it with a mature community behind it, is that we can basically segue directly into a serious governance period within weeks of launching it on mainnet. So we should have our governance portal done probably within 2 weeks after launch or so. So that way people will be able to actively participate in governance for the protocol pretty quickly after launch.
So for those who have never heard of the Algo Astros, can you break that down and explain to the audience what it is and how can they get them?
Sure. So we just finished our V1 for the Algo Astros collection, and we've created 400 unique one-of-one NFTs that represent themed astronauts. We also have several smaller collections that are kind of like, what are they called? Like different jump-off points from the Astros collection, which we've done interesting things with. And we always try to integrate utility into any of the NFTs that we create. So with the Algo Astros, there's a bunch of different interesting dynamic rewards that are built directly into how long you hold the Astros, and you can collect rewards at different points. And we have it broken down to blocks. It's kind of a interesting strategy that we created for distributing rewards for the NFT holders. But the Platinum Astro was a hard utility NFT we created as conceptually to try to see if there was a way to really integrate NFTs directly into a DeFi protocol. And then we're getting ready to launch our NFT marketplace, which will have a whole bunch of new ways of interacting with utility NFTs too.
Awesome. So let's talk about NFTs a little bit. So Headline is building out something called NFT Factory, where users will no longer have to opt in to NFTs to buy them. Could you speak a little bit more about what NFT Factory is? And then honestly, I want to get your take because there seems to be a divide in the Algorand space on whether the opt-in function is a good thing or if it's a bad thing and provides friction. So I'd love to get your take on it.
Sure. I mean, as someone who frequently uses Algorand wallets and participate as a supporter of NFT projects, buying NFTs and everything like that, I personally don't have a problem signing a million transactions because with all of the work we do with smart contracts, everything, all we do is sign transactions all day. But from a end user perspective, you want to reduce friction as much as possible because any kind of friction that's created, you lose a percentage of your audience. One really good example of this is click-through rate on websites. So there have been a bunch of studies that show that for every button that a user has to push when they first come to your website, you lose like 33% of your audience. So if you're trying to get a user from point A to point B, you want to do it with as little button clicks as possible. So let's say, for example, you're an NFT collection and you're trying to get people excited about your NFT collection. You want to make sure that when they're, essentially buying your NFTs or anything, that's as frictionless of an experience as possible. And that's kind of where we came up with the idea for, essentially, it's a shopping cart. It's a shopping cart on Algorand. And this is a common feature on Ethereum and other chains where you can basically put as many NFTs as you want, theoretically an unlimited number of NFTs directly into a shopping cart, and then you can buy them all at once. And we came up with a pretty innovative solution to do this. Basically, the way it works is it creates and this is all completely done with local storage, which is really valuable because it means that there's no backend needed for this kind of interaction. The less backend, the more decentralized. And the way it works is it creates basically a big index of NFTs you want to buy as your shopping cart. And then when you click checkout, it's going to basically ask you to send whatever the total amount is to an escrow account that's being created. And the escrow account will opt into all the NFTs, purchase all the NFTs, and it'll send you all of the NFTs.
Impressive. JT, your mic's off.
So that's really interesting because I have a couple questions that stem off of what you just said. The first one being, will it be working with all of the NFT marketplaces on Algorand, or is it only a couple from the start?
So this is for NFT Factory. We haven't talked to any of marketplace about
Oh,
using it.
okay.
Oh,
I
for
did.
your own platform.
For some
Oh
for some
yeah.
reason, I
Yeah, it
expected it
makes
to be
sense.
like a. It sounded like an aggregator. Okay, second question.
Oh
So,
no, NFT Factory is. We've been working on this since like March. We have a no. We're building a
Mm,
fully featured NFT marketplace, a lot like what you see on Ethereum, like OpenSea or Rareable or super rare.
I got
So
you
that's
now.
kind of our goal with it. Yeah, is to make something that is specifically for collections or creators. So like if you are a creator on NFT Factory, you can create an unlimited number of collections with almost no friction. You have all sorts of different ways you can customize them. We're even going to be adding a like update feed so that you can actually update your community and they can opt into notifications for updates for the collection.
oh wow.
There's all sorts of stuff like that we're doing to make it really attractive to collections. Like we have a like built-in 10% royalty fee on any sales on NFT Factory. So, there's always been conversations about whether or not NFT marketplaces should support different collections royalties or whatever, or how that should work. And we just have a fixed 10% right now. We're going to be integrating Arc 20. We're going to be looking to integrate that into the platform, which will allow for royalty enforced smart contracts for them. At launch, we have Arc 19 fully built in, so you can mint, edit, and create collections specifically with Arc 19 NFTs, which are configurable. All this stuff's already going to be built into the platform at launch.
Yeah, sounds amazing. Will y'all also have support for video NFTs? We're seeing a new trend coming. At least I am.
I think it supports video NFTs. We haven't really minted any yet. Actually, we might have minted a couple. We would probably want to look at ways to do some custom integration for it because it's a whole different kind of like stacky that you really kind of want for videos because of the way the storage works and everything for that. Because like we have restrictions on how much of how large your NFT data usage is because we have our own inferior gateway that everything will be pinned on for it. I would be open to hearing pitch from a video creator about what they would like to see as a collection for video NFTs. That'd be the best way to kind of decide what integration for that would look like. Because one of the things about NFT Factory that's super cool is that it's really, really extendable. Like we can, depending on what a collection wants, we can create full like UI UX custom collection pages for different collections that have things that are exclusively for that collection. We could also do, like we could, for example, have it so that the normal marketplace just works with normal NFTs. But if we had a specific video NFT creator that wanted a specific collection page, we could do specific or exclusive like integration for that specific page type stuff, depending on what the demand is.
Yeah, we're gonna have to talk because I'm interested. I'll say I'm working on some like music NFTs. I have released some about a year ago, but I'm making more of a bigger collection. I'll say. But yeah, so I'm just looking around talking to see what's the best way to do it because I've noticed all projects mostly are just the PFP profile pick ones or PNGs. So just being curious about the space development.
What I would recommend to anybody that wants to create any NFTs is to always have a PFP as part of it. So like even if your NFT collection is specifically for video NFTs, each video NFT should also unlock a PFP because so much of the
Write that note
Web3
down.
ecosystem is built around Twitter and other social media platforms as not only a way to interact with your community, but also a way to basically show support for creators that you believe in. That is such an intrinsic part of the NFT communities, like group experience that it's not necessarily expected right now, but it would be a huge bonus to any kind of NFT buyer if they want to support somebody and say, oh wow, this also unlocks a PFP. Awesome. And it doesn't even have to be a complex thing. It could be a simple thing, because you'd be surprised how many people are just like they want to support the creators they believe in, and having a way to basically display that support to the community is something that's valuable to everybody.
That's a great idea, honestly. So I wrote that down. That's definitely a great idea.
Fantastic.
So
So I have
yeah.
one last question about NFT Factory and the tool using that you use behind it to, opt into all of these assets at once. So, it sounds like if I wanted to buy like 25 different NFTs, I'd be able to with basically a single click or essentially. What about the same NFT? So, like, I know a lot of the times there's one of one NFTs, but say something like Vendable's Ibel City NFTs. And I want to buy, say, I want to buy 64 of them to become a level 7. I got to buy that 64 different times on Algo X NFT currently. And I did that to get to a level 6, and it took me quite a long time,
Oh,
honestly.
did you?
It
You
could
couldn't
have.
Yeah,
just
you
buy
crazy.
multiples of the same thing?
Are you able to? Because I wasn't able to click up multiples.
Oh, I didn't know that. So we don't have that feature yet. The ability to basically mint like 999 of something and then sell the same thing 999 times.
Yeah.
We definitely want to add it. It definitely makes it quite a bit trickier. So one of the things about NFTs that's really hard to do is all the stuff that works with the databases. So that's why like scalability for indexers and all of these things is such an interesting conversation. Like what's happening with NFT Explorer and there's scalability stuff that they're running into right now, and then whether it be Para or Algo Explorer and things that they want to do about like basically showing data from NFTs and the way to catalog all the data is it gets really tricky, especially when like standards for NFTs would be like one of one, but then you could have a collection that has 500 of each one, right? So then the ways that you organize all of that data gets very, very complex, especially the more different types of arcs that you're supporting. So, supporting something like ARC 69 and ARC 3 and ARC 19 are such different like things from a technical debt perspective. Just building our ARC minter, which gets used by tons of collections. So a lot of the stuff we do is completely free for the community to kind of like encourage Algorand ecosystem growth. ARC minter is a good example of that. It's a minter for ARC 19, ARC 69, ARC 3 NFTs. That makes it as frictionless of an experience as possible. It took us like probably a week and a half to 2 weeks to make it. I mean, like multiple developers working for solid 2 weeks straight to build this thing, because something like ARC 19 is so much more complex than a normal NFT. Just to be able to configure it, let alone show the data from it. And then you have the fact that it's upgradable, which means that the data is going to be changing. From a database perspective, it gets very, very complex. So that's something there's a really big conversation about the right way to approach or attack this issue of scaling databases for NFTs.
So what databases are y'all gonna be using on NFT Factory? Because I know, yeah, go ahead.
We have our own, so we've been building a database specifically for NFT Factory. Right now, we're finishing up a couple of tools that will allow people to basically upload an entire collection at once. So, like, let's say, for example, you have 10,000 piece collection. Yep. We'll have a tool that allows you to basically, you'll have a giant JSON object list, right, for all of it as one file. You could basically upload it to this uploader, and then you'll have a 10,000 piece collection on NFT Factory.
Then you got to go in and like edit all the names and stuff like that, or what? Or it kind of generate?
It would iterate through it. The backend would be able to iterate through it and generate the database collection so that is as frictionless of an experience as possible. You could basically import an entire 10,000 piece collection.
Impressive. Okay, I think I heard a rumor. I like to do rumors on the show. Are y'all going like not public, but are you guys selling shares of Headline, or what's going down? I read something.
No. So we were planning or / attempting to do a crowdfunding campaign like at the beginning of the bear market.
Yeah.
Because it's ugly out there ugly out there for projects, for devs. It's a bloodbath, Yes. I can't tell you how many projects I know that are shutting down or have shut down. And we're the kind of project, we're not afraid to try things, whether or not they're successful. We do that all the time, right? So that a lot of times you hear about, stuff that we're doing, and some of those things don't end up making it all the way to production. That's perfectly fine. It's not only healthy, but it should be encouraged for projects to be willing to experiment, right? So it was an experiment in crowdfunding that we realized pretty early on that just due to the market conditions, it just wasn't viable. And it was kind of like going against what our entire like strategy as a company was building towards, which was to, attack Web3 development a certain way. And so we decided that a better route was to basically just bootstrap this thing all the way to mainnet, which is something that, as far as I understand, nobody's done, right? Like every single mainnet protocol has done like an investment round of some sort, right? But because of the bear market, there is not a lot of active VC interest right now. And we knew that months ago. And basically, we had to make a decision of trying to basically do something that hasn't been done before, which is basically bootstrapping all the way to mainnet with an audited protocol, or to try to like find some other kind of alternative like funding solution. But we decided to bootstrap it, and now we've somehow managed to get here, which is crazy. Survived the bear market. It's been absolutely brutal, and I can't wait for this to be over. Not only because of it's one of the things they don't tell you before you start deciding to build a startup on a blockchain is that if a fundamental part of your business model is to accept payments in that currency, which is algo, that a bear market can basically completely erode your bottom line, right? Because
algo tanked.
It hurt. Yeah, exactly. Like it'd be like if your business was based in dollars and the price of a dollar became like 10 cents, you're now making 10% of what you were making previously.
And that gets exacerbated as the velocity of money slows down during the bear market as well, because volume on these exchanges go down. So it's like the exchanges are making less fees based on volume and less fees based on the token price dropping. So it's a double-edged sword on that one.
Sentiment as well, because so you have that double-edged sword, and you also have the fact that your primary user base, or the the people that are buying things, or for us it was NFTs at the time. If they're looking at their positions and everything, and they're seeing just seas of red everywhere they look, well, they're obviously going to be less inclined to buying certain kinds of fun NFTs or things that we do, because some of the things we do don't necessarily have a lot of utility, but they're a lot of fun. But those are all very valid revenue sources that have been able to help us build all this cool stuff that we do for the community. Because we have a token, but we've never sold it. We've never had any kind of token sale. So all the money that we've basically had to build everything we've built has been from either the grants we got from the foundation for developer tooling, or through NFT sales. And which is great until you get to a bear market, and then it gets you really got to buckle up, basically. And that's what we had to do. It's like we don't give up. We'll get through it. We'll grind it out, and here we are.
Yeah, respect, because all of these, like you said, a lot of projects are disappearing. Unfortunately, I even seen NFT Explorer make a comment on Twitter that they're having trouble right now continuing what they're doing. So it's like, this is a make or break time for a lot of projects and a lot of investors out here. So I'm definitely feeling the pain too in my portfolio, but we keep pushing.
Right? Yeah, I think it's such a good example of, it's like a microcosm of the entire community and the hurt that everybody's feeling. Something as essential and as valuable as NFT Explorer is like, this is just too hard, essentially. Or that the amount of time and sweat equity that's being put into this versus what they're able to generate in terms of revenue is making it a not viable solution. And that's not a good place for a blockchain to be in, because that's not a sign of a healthy blockchain. We're extremely bullish on Algorand, and we always will be, but things like that, when they happen, it's good to see the community get together, and hopefully the foundation, Borderless, and some of these other people that typically fund projects can get together and come up with a solution. for
Yeah,
NFT
because I was
explorers
like, man,
specifically.
I'm about to send them the money in a second.
Yeah, they're an essential service. Like, and
For
it's
sure.
yeah. So it would be to the detriment of everybody if they do end up sunsetting that platform.
Yeah, like
That
I
would be a very sad
depend.
thing to see.
Yeah, I depend on that for my NFT information, like 100%. I started that. I depended on Rand Gallery. I still use Rand, but now I'm just like 100% NFT Explorer. So yeah, we need them to
Right.
survive.
And it's interesting too because it's a great way of like looking at whether or not something is a viable business model. Because
Yes.
on paper, the way that businesses like that end up like being like really successful is they get acquired by really big companies or they're
Yep.
leveraged for being a free product or service. So
Yep.
MetaMask is a good example. So MetaMask is and has always been a free wallet for Ethereum that was made by Consensus and Joe Lubin. But because of MetaMask, Consensus just did a $400 million funding round, right? Because
Facts.
they have built an essential service for one of the largest blockchains in the world. They now have MetaMask institutional. They can now build and iterate products that have revenue streams on top of that. But in order to do that, you have to make sure that you have enough funding to get through bear markets, to get through those like cash negative periods. Like people are like, why doesn't an NFT Explorer just charge to list collections and charge for all these things? But you got to remember that they'd be basically asking for money from all these collections that are like really like
Trying to get money.
hurting too. Yeah. So
Yeah.
then the question will be, will these projects actually fork up or will they have to forego what is essentially an essential service? So I don't think necessarily charging the people that are like that have collections on NFT Explorer is the right solution. The right solution would be for them to get a seed round done to give them enough runway to last 48 months or so. And by that point, Algorand will obviously be in the top 5 blockchains in the world because it's number 1.
Let's go.
It's going to happen. It's just a matter of time. But then by that point, they will have built some like essentially institutional products, things for major collections that would be able to leverage specific parts of what they can offer. Because you have things like they have NFT Explorers on other chains, right? Solana's got a huge one. I guarantee you they got a ton of money from the Solana Foundation for it and from other VCs and stuff. And so that's the business model for those kinds of essential services. Not to charge for what is essentially that essential service, but to be able to build products on top of it. So the question is, well, can they get enough funding to continue to keep that essential service what it is, which is essentially free and an essential service, while being able to build those revenue generators on top of it.
It's very useful. So I do see we're getting close. Could we hit a few rapid fire? Oyster Pack is asking a lot of questions right now.
Sure.
Shout out to Oyster Pack. He said, "What happened to Headline's Algo Cloud?" And then,
right.
Thank you, JT.
Yeah. So basically, Algo Cloud is a platform that didn't have a immediate revenue generating vertical, right? And what I mean by that is basically because of the bear market, we needed to prioritize things that could generate revenue essentially when they launch. So with Silo, there would be a protocol fee. With NFT Marketplace, there is a protocol fee to list anything. Yeah, exactly. So with Algo Cloud, we didn't, from the time we had started building it, we didn't have a good, robust revenue generating model for it, right? So as it continued to progress, we decided that it made more sense to pause production of it during the bear market, because the way we always envisioned it being used would be by projects or businesses that were migrating to Algorand to be able to build essentially custom dashboards for them. But because of the bear market, the amount of projects that are migrating has definitely slowed down, and the amount of time and the amount of like money that needed to be spent to basically continue production of it, while still it being that far out from a revenue model, it was just more practical to put a pause on that and focus on these revenue generating protocols that we're launching.
All right. Makes sense. Thank you. The next one was happened to Headline's news project. Apocalyptic.
Great. So Oyster Pack is basically a troll that we've had a lot of issues with in the past, and I can't tell you how many times we've had to deal with this kind of stuff. We've been building Algorand for a year and a half, so I'm not going to even I'm not going to answer any more of his questions. Essentially, he has basically There was a period about 6 months ago that he went on like this super slanderous, like I want to say month-long like spree of just saying the most like untrue, completely like extremely like offensive things about us as a project that you can possibly imagine. And it was deeply troubling back in like, I want to say February.
I think it was February because he hit me a little bit on one of my videos.
It was very exciting because we do so much for the community, and to have somebody like that that's just so full of like venom and toxicity is just, it's disappointing. So the fact that like we're at this point now and we're actually building all this incredible stuff, and those kinds of people are still that full of like venom and animosity that they'll take an opportunity like this to continue to create that kind of toxicity is just really disappointing.
Yeah. Well, fair enough. I know I'm excited for Silo. I'm excited for a bunch of things that Headline is working on currently. I do want to just wrap it up with maybe a fun, positive little bit before we get out of here. I mean, what could you say for like a bit of advice for any builders that might be sitting on the sidelines, you know, watching this bear market, maybe, you know, waiting it out to enter the space? You know, maybe they're a little too afraid to enter. They don't know how to enter. What would you say to those aspiring builders?
Start building. I look at this as kind of like the internet in like 92 or 93. So basically, you know, the people that had the foresight to start building applications or websites on the internet ended up, you know, having extraordinary success because they basically saw the trend before a lot of the other people. And so, you know, they, you know, built out of their garages or, you know, one way or another, they bootstrapped it until it got to that point. And I think it's a lot like that in Web3 right now. So, you know, builders on Algorand, you know, during bear markets, it's always tough. It's always a challenge. And then you're always going to be like, or there will be some, you know, voices that will either second guess what you're doing or try to discourage you from doing it. But, you know, tough it out, stick it out. And then the value that it's going to, you know, provide is going to be extraordinary.
Excellent. One more thing, FIFA, who you choosing? Who you going with? Any FIFA thoughts?
So I need to look a lot more into what that is going to be like with Algorand. So I need to check out is it FIFA Plus, the marketplace, right?
Yeah.
Yep. Yeah. So I need to check that out. I'm pretty excited about it. So it'll be interesting to see if we can get to the World Cup after. I don't know if is it during Decipher that's supposed to be.
I think so. It's real close. I know it's in Qatar, right?
Yeah, it's in Qatar. It's right around the same time. I don't know if it overlaps, but it's real close.
Very cool. Yeah, no, I definitely need to look more into it though, for sure.
Yeah, so I got an epic though, or excuse me, not an epic. I got a couple of rares out of my packs and some commons, so I might have to go back to try to get me an epic. So I'm collecting a little bit, and then in terms of like a team, someone in my Discord, you know, talking about Portugal, so I need to look into them. That's a country I'm trying to visit, so I might be rooting for Portugal.
Fantastic. Well, I appreciate you taking the time out of your day to join the show. I know we're just about wrapping up in on the end of the hour here. I want to thank everyone for joining and like lighting up the chat section. The live chat was on fire today. And if you haven't done so already, like this video, subscribe to the channel, and leave a comment down below so that way it boosts the YouTube algorithm.
I think Aaron, what's your Discord?
Ooh, good question.
So our Discord, like the link for it, or like my user, I don't use Discord too much, so
fair enough.
I'm in the so you can find me I'm only in a couple of Discords. I'm in the main Algorand one, I'm in the Algo Discord, I'm in the Headline one, of course, Algo Astros, and it's USS Aaron.
So go follow Headline on all platforms and channels. Thank you, Aaron. This was a great show.
Absolutely.
All right, everybody. We'll see you next week. Take care, everyone.
Peace.